Welcome to BuySide Global. I have here the ES chart from October 16th. I just want to review another trade opportunities that you can get from the liquidity zones indicator, primarily from level 2 order flow. If you are new to BuySide Global or if you are new to um, liquidity zones indicator, what we have here is translating the data that we get from level 2 order flow. You have seen the level 2 order flow, DOM, all those numbers changing. It's very hard to analyze. We have created an algorithm that takes all those streaming order flow data and then create the more tradable levels. We call those liquidity zones. We are looking for the breakout opportunities from the strongest zones, and then we're looking for one particular setup in particular: breakout, retest, and bounce. I think that's exactly what we're looking for when we are looking for the trade opportunities. So again, when the let me draw the line in terms of when the market started. I think the market, this is my market started my central time. Then let me same thing here. Right here. Okay. So with that said, let's go back. When the market opened, um, market went down, and then you can see a lot of buy side control started coming in. Ideally, if since you are looking for the breakout trade, we need to wait till the breakout happens, meaning price came down, we saw a lot of liquidity. If the price broke down and then came back and retested, when it bouncing from there, we could have taken the short trade. But in this case, that didn't happen. The price came down, took some liquidity, and then went back into the range. So we did not take any trade. But first trade opportunity was, you can see the level 2 liquidity zone started building up. Price went and then broke through the price range, went up, came back down, and retested and then bounced back on the same level as the liquidity zones where it was broken. And you can see this was the first trade opportunity from the liquidity zones. After that is over, we are looking for the breakout retest, but you can tell because there's a green, it's breakout. Why it's not a trade opportunity? Because it didn't come back and retested here. It didn't come back and retested here. It did come back here. In this case, the price came back and then retested here. um, for me, this is way too it's not like a, if it is like here, then it makes sense. It's like almost a swing. I didn't take this one. But as the day progresses, maybe after like 30 minutes or like really 1 hour, you should start seeing the what is the most critical levels forming for the day. Okay, that's very very important. So the unit, okay, you can see the buy side liquidity. This is where the control already bounced very strongly. On the sell side, the first time the price rejected liquidity zones, that means this is the critical level. So I know the top boundary, I know the now the bottom boundary. That means I need to either wait for the breakout on this level retest, or a breakout on this level retest. That's what I was looking for as the day progressed. But it did break out, but it didn't go through and then retest. It clearly rejected right away. Price did not even go up further. That means there is no trade right there. I don't want to take a reversal trade. We are looking for only breakout trades. So again, it did not break out, came into the range, but the liquidity was held strong. You can see that liquidity was held strong on that level. Okay, held strong on those level. Eventually, the price getting close and then it did break out. Do you see this? All the liquidity was broken, went back up, come back down, and then it bounced. This is exactly what I'm looking for. The retest, you can see all the rejection candles right there, and then the move up exactly where the liquidity was broken. This is exactly what we are looking for in terms of breakout retest. What happened after that, we can clearly see in terms of the price broke out retest. The price really had a very good run. Okay, very good run. But The question I always get from the traders is that entries as well as the targets exits. So let's start with the stop loss first. When you are entering the trade, one of the most important thing is you need to know where to keep the stop. Okay, so that's exactly why we are waiting for a breakout and retest and then bouncing back up. Why? That is giving the confirmation for us where we can keep our stop. Without that, there is no way. Since the price went in back, this is our swing low. Just because there's swing low, I don't, you should not place your stops right there. Why? Sometimes the price goes back up there, goes back up, come back to the same liquidity level, take your liquidity, and then go up as well. So never put your stop right there to get stopped out like this. So what I recommend is like give some breathing space and then keep your stop. Keep your stop a little bit below, give some little bit space. And also, I don't keep defined target because I don't believe in 1:2 or 1:3, 1:1. Um, that's you can find that kind of strategies all the time in internet or YouTube or whatever it is. That doesn't make any sense for me. But if that works for you, that's great. For me, the way I exit my trades is to the chart to tell me I should exit. Otherwise, I'm not going to exit. Because the reason is that if you train that way, you'll be able to hold your trade longer when the market really moves, trending longer. You will not regret later. Okay, how to find the market to tell you now? You have your stop here, you enter the trade right here, market is going up. One thing is that in the liquidity zones, I clearly look for who is winning, who is losing. Bias control is keep on moving, keep on moving, right? You can see the bias control is keep on moving. So when buyers are keep on moving, taking all the control, sellers are keep on ending. The sellers controls keep ending. See this? Keep ending. They are losing. They are losing the control completely. In this case, why would I exit the trade? There is no reason for me to exit the trade until I see the real, uh, like some kind of confirmation from the order flow, from the level 2 zones, especially that sellers are regaining the control, meaning they are losing here, right? Keep on losing, keep on losing, keep on losing. Look at what happened right here. Price went back, bounced, price pushed down. Now they are taking all the control here. They from here move the control here and then move the control here. That means they are pushing the prices down. Now the sellers are not losing ground. Sellers are taking all the control, they are pushing it down. So that means for me the trade I exited almost somewhere here because I waited till because my stop was keep on tailgating and then it was somewhere here. So I didn't wait till the came back to the stop. I exited somewhere here. The reason is that for a long time sellers were losing ground. They were like getting killed, getting stopped, getting stopped, getting stopped. And then what happened? They are sellers are regaining the control. They are like regaining, pushing the prices down. Once I saw the confirmation, I can exit. So this way, you can hold the trade really longer, make that the 1,000, 2,000 plus profit on a one single contract properly in this way. Otherwise, you'll be making a lot of trades, lot of entries, lot of exits, lot of failures as well. So try to read the chart, try to read the market, how it's going. Don't get deceived by these fluctuations in terms of that's going to happen no matter what. Even look at this one. So even the market fluctuated way back, right? Way back down. So why it came back down? Because there are no green zones. There are no bias here. Bias was here and then bounced back up. That means still bias are in control. Still bias in control. Don't get deceived by this kind of pullbacks or all the things. It happens all the time. You just need to monitor the liquidity zones, who is in control. Sellers losing control, losing control, losing control, losing control. They have started gaining control. And then buyers are gaining control. That means once you start reading the liquidity zones, who is in control, that gives you a lot of confidence to stay in the trade way longer than okay, 1:2. Okay, I'm going to exit. 1:3, exit. And then after exit, when you see the markets keep on going, you know how much frustrating to see that. Oh my god, I could have stayed. I would have made like 2,000, $3,000 over there. It happens a lot of the time. The reason is that you guys, most of the beginner traders, they learn from the internet gurus. They say like 1:2, the ratios and all. No, market need to tell you it's when it's over. I think that's something very, very important. Try to read the chart, try to read the order flow, try to read the liquidity zones, and then you need to have the confirmation whether when the run is over. Look what happened when the run is over. From this run is over, this particular hole after that run is over. Look at this particular level in terms of sellers kept the control. Sellers kept the control right here. Price did not break, and then buyers kept control right here. You can green zones right here. Price did not break down and retest here. Price did not break down and retest here. Nothing happened. Price just moved sideways. That is the beauty of liquidity zones. It not only gives you the very good trades for you to enter on a breakout and retest, and also help you to stay away from entering the bad trades and lose the money you already made by clearly marking the boundaries. Price did not break out, going sideways. There is no trade. Just uh, be patient. Be patient. Even if it takes a long time, sideways market, be patient. If there is a consolidation, there's a breakout. Don't forget that. Okay. So that is the gist of the today's day in terms of those things. But that's not the main reason I recorded the video. The reason I want to record the video, when I was chatting with one of the customers, we're talking about some of the questions, I answered them. During conversation, I did mention that I did enter the trade here in terms of right there, in terms of right here. I entered the trade right here, long trade, and then I was able to hold. They asked him, "This is not a breakout trade. Why did you enter here? Why did you enter here? This is just the liquidity sweep from here. Why did you enter the long trade here, and then you're able to hold the rally?" So for that to answer, I wanted to stick to the same thing. I am teaching the breakout and retest. Okay, I'm teaching the breakout and retest. Yes, I'm teaching the breakout retest on the liquidity zones, but don't forget that I have been trading before liquidity zones. I've been trading for a long time, supply and demand. To show you what I'm talking about, let me show you something here. Um, Let me pull up the different chart. I'm going to pull up the ES chart from okay, 1 hour chart. This is ES 1 hour chart, but this is exactly. Oh, so let me draw that first. Okay, in terms of what I'm looking, what I can see, and why I took the trade. Okay. All right. So this is what the level we're talking about. So in the 1 hour chart, almost from October 9th, October 10th, it's like a week long. This particular level was very, very important in terms of it can went there, pushed back, went there, pushed back, went there, pushed back. That means this level becoming a very important critical level for supply, and then pushed up. Eventually, the price broke, retested, went up, retested, huge run. Okay, and then came back, rejection, went up, rejection, went up, rejection, went up, and then this is what this morning. This is exactly what this morning. When I came in this morning, I was looking at the pre-market. It price came back to the same level, right? Came back to the same level. What is this level? This is around like 58, 55. You see this? This is 58, 55. Came back to that level. For me, I'm looking at 1 hour chart. As per the breakout retest, breakout and retested multiple times, but did not break it down. But since I saw the huge red candle, that means it may go down or it can bounce back up. I don't know yet. We need to see the price action. That's where I started. So that means it can go back down and retest, go down, or it can retest here and then go up. That's only two possibilities because this is a very critical level. But what happened? What happened this when I saw this when the market opened? The same level, at the same level in terms of, look at the lot of buyers stepping in, all this level, small order flows, small order flow. But look at the order flow, the buyers, amount of buyers stepping in. the level where I was watching. That means that it is the critical level by stepping in. This is why I entered the trade here. And then you can see the ride is went on really. My point is, once you learn the breakout and retest, there is lot of ways you can trade. You should be then next upgrade, next advanced step is learn the supply and demand, look at the multiple time frame charts. You should be able to look for the longer trades in terms of much, instead of scalping small ticks, you can scalp much longer ticks. So let me show you, okay, the Confluence wise. One other thing which I saw this morning when the market opened, I always look for the boundaries, meaning in terms of when the market opened, right? So look at this. This is the boundary, bottom edge. Price came down. That means this is a very critical level. I want to break down and then go down. And then we can see this level become critical level. Price went back, rejected once. That means next time if the price is breakthrough and the retest we are looking for, that means these two levels are critical, right? But this is not a triangle though. This is not a rectangle. Price is not going like a rectangle. The way the price was going, it's going like what do you call, like a wedge. Look at the wedge. Look at the wedge. You see the wedge? The market was going like a wedge, squeezing the price range, this is what we call as trend line trading. A lot of traders, swing traders, that uses a trend line in terms of it was creating a trend line sliding up. On the top side, it is like squeezing, creating a wedge. Now, same strategy applies when the price breaks out and retested on the same place where the wedge was creating. It's a long trade. So what is it showing to you? The point I was showing this wedge is because it's a confluence. Two different strategies, completely different strategy, is giving you the trade entry at the exact same place, at the exact trade direction, and then more precisely. Liquidity zones also gives you the same level, and then different things can. That means that's how. Anytime you see the confluence of multiple systems giving you same kind of direction, same kind of trade, everything, that's a trade you can enter with a much higher confidence. Okay, why I was able to hold the trade longer? Okay, so now in that case, I wanted to look at in terms of the market right now. A little bit out. Okay, now same thing in terms of the market, the same thing in terms of the. Okay, I'm going to use the lines this time. Okay, with the ray. Okay, look at this trend line right now. 1, 2, 3, 4, 5, 6th touch, 7th touch, 8th touch, 9, 10. The whole day it was retesting. This is why I was able to hold my trade such a long time to exit until here, right? So that's why I'm telling you in terms of look at multiple ways to get a confidence from you, and then it's a clear way you can see the support is forming at the trend line, and also liquidity zones are keep on shifting to the same levels every time. One more thing I want you to look at is that this every time it retested, it's creating a liquidity zone. You see this green, you see this green, you see this green, see this green. It's creating the liquidity zones right on the place it's retested, where that means traders are entering, leaving the stops exactly same places. That means they are using those different strategies, but it's giving exactly the stops are exactly in the same places. That's why instead of scalping for like a few ticks, few points, try to see the big picture in terms of what's happening in the overall market. Then you'll be able to make trade with confidence. Number one. Number two, you'll be able to stay in the trade longer until the trend is over. That's why I wanted to show you multiple things in terms of. But one key thing out of all of this is I showed you supply and demand. I showed you the wedge, everything, but everything have one common line, which is what breakout and retest. Okay, breakout and retest. That's where you come. Even in this case, breakout and retest out of this wedge, this wedge, this wedge. We can retest. Same thing we talked about in terms of the supply and demand. What is that supply and demand? Um, so even the supply and demand also I showed you breakout and retest. Liquidity zones, breakout and retest. All the things, one thing and two things common. Looking at the exact level, that very critical, and then waiting, be patient until it breaks out, and then make sure it retests in the same level, and then enter the trade. But out of all three, liquidity zones is the easiest place to start. Why? You don't have to worry about which line, what is the zone, what is the supply, all the things, because it's printing for you clearly such a strongest zones for you can see in real time. All you have to do is watch those levels, wait for the breakout, wait for the retest, and take the entry. If you are new to BuySide Global, if you don't have the liquidity zones, there's a link below in the video in the YouTube channel description. You can get access to the liquidity zones, get the subscription, get the liquidity zones indicator. You will also get the all the training videos on how it works, how you can watch your chart, how you can enter, how we can get the confirmation, how we can avoid the false breakouts. Everything is out of the videos that you're gonna get once you get the indicator. So get started with liquidity zones. You don't have to worry about finding the levels. Indicator is going to give you everything. All you can do is make a retest. Once you learn that one consistently, well, you're able to do it perfectly, then you can stack up with, okay, now I can add more ways to extend my trade. I need to look at supply and demand. I need to look at other things that we can later. But for now, starting with liquidity zones, that's the easiest, high confidence, high probability setup. Start there. Um, if you like this video, in terms of what I was trying to explain, the power of breakout and retest, please do like this video. Give me a thumbs up, click on the like on the video, and also please subscribe to the video, because more and more I create the video, if you can watch it on regular frequently, this way you can see again and again how these setups are happening, how we can enter the trades. Every time there is a video, not only I review the trades, I try to give you some additional information of additional training information. Today I was talking about supply and demand with liquidity zones. So you can learn step by step slowly, adding more and more strategies to your arsenal. So subscribe to the channel and also like this video. Until then, I'll see you in the next video. You guys have a great day.